Trump wants housing more affordable, but he doesn't want to decrease the cost of housing because that lowers people's net worth.
I always want weekly or monthly KPIs so that if the P&L is not where we want it to be, I can diagnose what the problem is.
You have not run a cost segregation analysis, or the segregation analysis is over 5 years old. Your depreciation recapture tax, okay, which is typically 25% of the difference between your sales price and your basis. So if I'm selling a business, I do OZ. If I'm selling stock, I do OZ. If I'm selling crypto, I do OZ. But if I've bought a real estate property and I've done a cost segregation analysis on it in the last 5 years,
You always have limited resources for unlimited opportunities. So like deciding where you're going to put your 1031 exchange money is like so valuable.
To weekly headlines and Project Pearls. In headlines, we unpack this week's biggest stories and share how they're shaping our own personal wealth building decisions in real time.
Then in Project Pearls, we'll pull back the curtain on our real estate deals and share the wins, the challenges, and the learning opportunities.
we have a great show today. With me is the Sultan of Smart Money, Dr. Reid Faldad. Reid, how's the family, sir?
Family is good. I don't know yeah, we got back from a trip not too long ago. We're trying to schedule another trip. I mean, it's kind of like yeah, the days are long, but the weeks are short kind of thing. Like I don't know. It's
Yeah.
just you're kind of in that we're in that baby phase. So it's just bedtime routine, get through it efficiently, right? Nighttime routine, it's just always chaos in the morning, getting the little one ready for school and then managing the baby and then trying to slot in some productive work in there and trying to work out. And I mean, it's just time management, like for sure, balancing it
But
all.
you are very brave to take a vacation with newborn and then plan another vacation. You are a braver man than I. I tend to hunker down in those situations. Way to be, man.
Man, I think the toddlers though, like just are in better moods when we're outside our home. Like the new
True.
environment stimulates them and they like, so I think that's it is like at home, they just get a little stir
Yeah.
crazy versus if we
We,
go somewhere, it's a lot of work, but at
yeah.
least everyone's in a good mood.
We
So
took a lot of walks. We took a lot of walks.
yes.
You're right. Otherwise, they go nuts.
How
That's
about
cool.
you?
Okay.
What you got?
Yeah. What do we got here? Let's see here. Mainly ski team with the kids. We're up here
Okay.
at the ski mountain on the weekends, just doing ski team, super fun. It's the same thing. You get the kids out of the house, they're outdoors, beautiful views, fresh air, they're using their bodies, they're hanging out with other kids, they're learning discipline. I mean, we love it.
Mhm.
There's some chaos though, because we got like the indoor soccer and we got the basketball and anything over one sport at a time. You're just asking for chaos.
Yeah.
More than one sport per child. But we're grateful. So it's been great. Yeah. So life's good. Um, so this is our headlines and Project Pearls show. So headlines. Read what's new in the news this week.
Yeah, I think it was just what we were talking about a little bit, where it looks like the Fed decided not to raise or lower rates, but just to hold steady. And then I guess Trump already, you just mentioned this today, right? That set his nominee for the new Fed chair.
Yeah, Kevin. Kevin Warsh. So this is somebody considered, I think, last time. So he's doing this.
What do
One
we
sec here.
so
So
so what
yeah, go for it.
so what do we know about this nominee? Do you have any insight into his kind of fiscal policy or I mean I would assume if Trump picked him, he must want to lower rates or at least he's that's what he's kind of projecting right now, but
Yeah, I mean it's just like anytime you can't legally you can't publicly or legally say, hey, you're going to lower rates because the Fed needs to maintain its independence from Trump, correct?
yeah.
So, like, he can't say that, but Trump is very clear about what he wants, right? He doesn't necessarily want home values of to decrease. Uh, actually he doesn't want home values to decrease, but if home values decrease, people's net worth goes down, right? They have problems financially. So he doesn't actually want home prices to go down. So he wants homes to be affordable, but he doesn't actually want home prices to go down. So what do you have to do? You have to lower interest rates, as we've talked about, to achieve that, right? And so I'm sure there's a conversation, an undocumented conversation that was had between Trump and Kevin here that like, hey, like, we need to maintain that independence, so the other countries, have more confidence in us and our own government, you know, to maintain that confidence in the United States. Yeah, I guess federal, like, locally and internationally, but at the same time, like, hey, this is what I need, right? I'm sure that conversation took place. And so I just don't see Kevin Warsh not like leading the
Rates.
charge on cutting rates. I'm
Yep.
not saying he can't seem like over the top on things and not independent, but I definitely think there's going to be an acceleration versus what Jerome Powell would do right now. Trump nominated Jerome Powell too, right? So
Mhm.
you need to understand that it's multiple factors that play here and results will vary, but in general, those two facts, Trump wants housing more affordable, but it doesn't want to decrease the cost of housing because that lowers people's net worth. And two, yeah, the interest rates will just kind of try to turn down. I think those are the key points for me. How about you?
Yeah, I mean, I think we've talked about it before. We just know that lowering rates is stimulatory, right, to the environment for a lot of different reasons, right, across the board.
Every business, I mean, almost every business, right? It's debt based in the US. So,
So, and if
even
Trump is if has Trump and Bessent and basically, I guess we'll call it the Trump administration is like, hey, the only way is to grow out of this deficit, right? Is like they're pushing the gas pedal on growth as a way to combat the government deficit, right?
yeah,
So
yeah.
this is like one of the big levers, lower rates, get the economy booming, and hopefully print some big GDP numbers that help us get there. I mean, I think
Yes.
that's just kind of the
Yes.
big play.
You're not increasing percentage taxes. You're increasing taxes by increasing the size of the GDP that you're taxing on, right? And then obviously cutting waste, fraud, abuse is there another big piece of that. So,
Yeah, ultimately, right, GDP per capita is kind of, you think those numbers are kind of interesting when you kind
yep.
of you look at other countries and how high our GDP is per capita. It's pretty cool. I mean, if you're talking about we're either the biggest or second biggest economy in the world, but you compare it to China, who has a billion people, billion plus people, and I don't know where we're at now, 350 million, 400 million. So
Yeah.
it's pretty cool.
Okay.
Yeah.
And then Scott Bessent needs to refi government debt at a lower rate. That's the other piece, right? So,
Yep.
so this like we can't predict the future, but like all the incentives, all the motivation here is to cut rates, which as investors, right, tips to help us on our stock portfolios and helps us on our real estate and our business investments, like dental practices, right? EBITDA multiples, all those things go up when interest rates go down due to leveraged buyouts by private equity firm and leveraged buyouts take debt. So good. Okay.
If you own assets, you benefit from it, simply put, right?
Yeah, yeah, own stuff.
You gotta own stuff. You gotta own stuff. Okay, cool.
Project Pearls, Reed. Let's move on here. What have you learned this week, this month that can help our audience?
Yeah, so I mean, you can apply this to dentistry, you can apply this to real estate. Basically, like you cannot make, this is just my line, you cannot make operational decisions based off of P&Ls. Okay. And I say this just because, I'm on different real estate groups. If you can have I'm in different real estate partnerships with my dental practice, it doesn't matter. I always want weekly or monthly KPIs so that if the P&L is not where we want it to be, I can diagnose what the problem is. And you can only do that with a list of KPIs. So I do that with everything. So if there's an apartment building, I have our weekly KPIs that I want to see. If I have an RV park, we establish our KPIs that we want to see. So then all of a sudden you start to see trends over time and you can maybe spot where the problem is before it gets out of whack, before it already hits like your NOI for the year or whatever you're trying to do. So I get a little frustrated like when like a CPA wants to advise you based off of a P&L, that's not going to work. They just don't understand your business. They don't understand the day to day. So key point
It,
on that. Do you have anything for that?
I think you always need the numbers and the story. So I think you always need both too. You need the subjective, what's going on here, the context, right? So I always say story and numbers. And you're
Mhm.
just getting more specific about numbers, which is very important too. Hey, that's not the income statement, the balance sheet, and the P&L, the classic financials, right? I also need some KPIs here, right? Leading, lagging. Um, yeah, I think those are
Yeah.
just two keys to life, right? What's the story? What are the numbers? Yep.
Yep. Yep. You do it. I mean, everyone does it with different things. You can track your fitness, right? Calories in, calories out, right?
I
Your
I,
everything.
I let's just go to goals here. Actually, this is great. This is a good little. So all my goals, the most effective goal setting is three tiers. You have like your visionary goal, like, dude, I want to have like a six pack, like I want to be shredded, I want to be healthy so I can play with my kids, right? Like I want to look good, like that's like your visionary goal. That doesn't help you hit the goal. That's just like identifying what like sparks your joy. So there's the vision goal. The next one is the what do I call these? But basically, it's the number goal. It's like the trackable goal, right? Oh, I want 14% body fat, right? That's how am I going to do it? But again, 14% body fat doesn't help me achieve the visionary goal or 14% body fat, right? The last part under that is the process goals, right? So
Mhm.
what are you going to change in your processes to do that, right? I'm gonna, eat 180 grams of protein a day. I'm going to work out, Monday, Tuesdays, and Thursdays from 6:30 to 7:30 and Wednesdays from 1 to 2, right?
Mhm.
And like those are the process goals, and then I got like six more. They get me to 14% body fat. But like so you got to have all three tiers of goals to be effective. So I think when you're looking at numbers and whatnot, it's the same thing, right? If you're talking about your practice, right? I want us to be like the most profitable and best service practice and best culture in the city. That's like your visionary goal, right?
Yep. Yep.
Okay, so your profit margin is 25%, right? Your net profit margin, right? On your practice. Okay, it's going to be 25%. That's profit. On the culture piece, it's like our retention rate is going to be on team members is like we lose one a year, right? At most, right? Maybe that's culture, how you define your cultural number, right? And then service is, oh, we have the most five-star reviews in town, right? So you have three numbers you can track for KPIs, right? There's way
Yep.
more than that. You and I know if it's a team member, you want to give them like one to two KPIs, but you and I are looking at the dashboard of our KPIs, which is like, I don't know, for practice, whatever you
15.
did. Yeah.
Yeah. 20.
And,
Yeah.
but then all of that comes down to the process, right? How are you establishing the culture? Oh, we do team meetings, blah, blah, blah. And here's our agenda focusing on this, right? We do two service events a year, right? Like that's what matters, and that's how you achieve your numbers, and then that's how you achieve your spark your joy vision. So
Yeah, I love looking at like the listed KPIs, and then I even have so like for dental practices or for the property manager, to your point about a story, right? It's like if the numbers aren't where they should be, or they're very good, what is the narrative around that? What is happening, right? And then that helps you really kind of like, okay, we're good, but now we can only focus on everything. Let's say 15 KPIs, but two are off. Then you ignore the rest. You don't have to worry about the rest. Just focus on those two, right? And you dig into them a little bit. What's going on with this?
tell me
Right?
more
Just
about that. Tell me more about
well,
that.
okay. So for example, there's two main ways to grow the practice in terms of so active patient base, right?
Yep.
And then also revenue per patient, right? That's those are two key metrics, right? Because the more
Yep.
patients you have and the more revenue you do per patient, it's going to overall grow your um, gross revenues of your practice, hopefully your net profit also. But how do you grow active patient base? Well, it's new patients and it's retention, right? And so you should know where your new patient number should be. You should know where your retention should be. Now, if either
Yep.
of those numbers, like we want, let's say 98% retention with our patient base, if that falls, right, how are we influencing that? Well, it's reappointment rates for hygiene and it's reactivation of our existing patient base. So how
Yep.
are we reactivating existing patient base? Our team has to do so many outreach calls a week, right? Are they
Yep.
each hitting that number? Okay, so do we have a process problem or do we have an accountability problem? Are they doing what they're supposed to? So you just go deeper and deeper, right? On the new patient side, it's a little bit more of that's a little harder because it depends on your marketing company, the strategies you're using, right? It's harder to diagnose sometimes where your new patient is, your new patient
And,
numbers, if they're good
and,
or
and
bad.
Google
But
doesn't want any of that tracked anymore.
yeah,
So they do
yeah,
everything they can so you don't get data. It's funny.
yeah.
100%. Same on revenue. I mean, you just break it down, right? Like dollars diagnosed times case acceptance percentage, right? It's just math. And then you can focus on where you're at. Okay,
Yeah.
love it. Any
Well,
other pearls?
on so there's something okay, so there's this is a pearl, but also I'll ask you like your opinion on it too. So carrot versus stick for incentivizing, right? Would you prefer one or the other? Do you use a bit of both?
Yeah, the only stick I use is ego. People don't like to look like asshats in front of other people. So,
Mhm.
yeah, I don't like the whole shame game doesn't do it for me. It's not how I was raised. It's just not effective, I feel like.
Mhm.
But the whole like ego piece is very important, right? We talked about this before with workouts. Like I don't want to miss a workout with like this other group of guys because I'm going to look like a slacker to them, right? In my brain, right? And that is highly motivating. So it's the same thing with your team. You just try to create a situation where everybody gets together and talk about accountability or process problem. If it's an accountability thing, everybody presents and nobody likes looking like the slacker week after week, right? And so it's not so much a shame or a stick, it's just more pride, ego, identity, right? You just people put people in situations where you can't hide, right? Because
Yep.
it's just better for everybody, right? You're only going to win the Super Bowl if you have A plus players everywhere, right? And this allows A plus players to call each other out and help each other grow better, um, and uplift people. So
So let me ask you this then, because this is mine on accountability. So, because you mentioned that, and that's where I wanted to go next. So, like, my internal debate around accountability is just that, like, I really am obsessed with like personal responsibility. Like, my number one pet peeve with a team member or hire is like, no one can take, if they can't take responsibility for a mistake they made, and they just keep, throwing out excuses or dodging it.
yeah,
Like,
yeah,
can we just acknowledge that a mistake was made? And that's fine. We all make mistakes. You just
right.
acknowledge it, right? Let's talk about the solution moving forward and just agree that we're gonna do better next time. And that's fine.
Some people can't separate their internal self-confidence and their internal ego. Like their internal feeling of worth from the external things that are happening around them,
Like the
right?
outcome.
The outcomes. Yeah. So a strong leader, a confident individual bases their net worth off of who they are internally, right? A weaker, a less reliable person bases their net worth off their feelings of worth based off of external validation, right?
Yeah.
I'm
Hmm.
only good because this person says I'm good. I'm only good because I got first place in this event, right? When you're a kid, that's normal and natural. You got to build up that self-confidence in yourself, right? And a lot of that's your friend group and outcomes. But as you become an adult, part of being an adult is like valuing yourself for who you are. And like you said, if you don't have a good outcome, it's like I still love myself. I'm still a valuable human being. Why didn't I have this good outcome, right? And willing to take a look at that because you separate the two. But if you're tied directly to outcomes, like your feelings of self-worth, you can't mentally admit a mistake because you're also mentally admitting as a human being that you are inferior, right?
Flawed
And
or yep.
flawed. Nobody, most people can't do that, right? And so that's the piece you have to help educate people on is that internal feeling of net worth first before you can go there.
Yeah. And you see this manifest as like just insecurities in a lot of ways. Like a person who needs this external validation is also a person who tends to be more insecure. And so they get knocked off their center very easily and it's hard to get them back. You know? I
I
mean,
always start with the positive. I mean, it's
yeah.
framing, right? That's somebody you got to frame with. Like, Jill, we're so great to have you here at the office and because A, B, and C, right? And I value you as a person, and any feedback I give you for improvement is not going to affect my how much I appreciate
Opinion
you,
of you.
right?
Yep.
It's
Mhm.
just this is how can we get better for the patients and the team around us, right?
Yep.
And so I frame it like that, then I go into it and then it's better, right? Or I ask questions. I say that, then I say, okay, how do you think this went last week? Oh, it didn't go as good. Okay, why do you think that? Because of this,
Yeah.
this, and this. What do you want to do better next week? Okay, can you commit to that? So I follow up with you that it'll be done next week? Yes, I can commit to that. Awesome. Can't wait to talk to you next week.
Okay, I can say weakness of mine sometimes is that for the sake of efficiency, like and just mental energy, don't always I'm so direct about things because time, right? Like let's get to the point. There was a problem made here. Let's discuss it. But you're setting up the stage nicely to maintain that relationship, right? That goodwill a little bit better. So I guess like I think one of my superpowers is I'm very good at holding people accountable, but that also comes across as abrasive. And I know that of myself. And so
Yeah.
I try to give grace where I can, but man, it's been really good for me because I can have any conversation with anyone at any time and I just know it's worth it, right? But so I don't versus like managers, other leaders of the team really have a hard time trying to hold someone else accountable. And so I have to coach that in them. But I also need to like reflect on myself of like my style of holding people accountable might not be the best style, right? Like I could hone that skill. I'm willing to do it. It's just the delivery might need to improve a little bit.
And
So,
I think that's the hardest part. Most people aren't willing to do it, right? So you're only as successful as the number of uncomfortable conversations you're willing to have, right? You're checking that box. You're like, I'm willing. It's
I'm
just
willing.
like
Yes,
you're just
yes,
so efficient that I mean, especially because we're more like results oriented, right? Like somebody can give me a
yeah,
compliment and I'm like, okay, thanks. Like that's fine, but like I don't really care, right? Like I know who I am and I know what I'm about. Like you giving me a compliment's nice, but like I don't really care. Where a majority of people need that compliment, right? It helps
yes,
them, it feeds them, and so
and
you have to
yeah,
utilize that. But then I've seen cultures develop that are so non-accountability based, right? So fluffy, and you're so afraid of offending anyone that you don't get anything done, right? You're not
that's
really
it.
adding value to society. So there's no like, oh, it's A or B is the way to go. No, it's both, right?
It's
You need to be accountable. You need to be, but be kind and gracious and appreciative while we do it. So,
yeah,
yep.
yeah.
But
Okay, that was good.
there's a reason I don't have employees anymore, Reed. Because it's a lot, right? It's a lot. It's much
But
better
this,
to, yeah.
but this extends beyond that, right? Like accountability extends to your marriage, your kids, like
Yeah.
your partners, your vendors, etc. Like,
All my strategic partners I use the same thing with, right? The guys I'm a little bit more direct with, right? But all of them I use the same framing. You're right.
yeah,
And I'm short too. Like I have my pet peeves. Like when I'm on a call and it's like we're talking about the same thing we've already talked about for like the third time. Like, and these are like like successful adults. I don't come at it with the grace I should. I just want
yes,
to be, I like, I'll be like, look, I mean, I'll just be like emotional about it and I shouldn't, but I'm like, look, I'll interrupt. I'll be like, look, we've talked about this 4 times and I get where you're coming from. And I think it's important to look at it, but we've already analyzed it. We've already come to a solution and we need to move this project forward. So let's not talk about this again.
mhm,
And if you want to have like a conversation and reanalyze this on the side, that's fine, but we can't slow down the project for the same reason again. We've already done the analysis and come to a solution. Okay. Okay, great. You know what I mean? Like I'm a little pissed off, but I'm a
But
little
there's a
pissed off.
progression. But
I'm a
that's
little
you didn't go
pissed.
0 to 100. There was a progression there. There was multiple conversations before that built to that point.
Yes.
Yeah.
Or I ask somebody to do something and then the next week they don't do it.
Hmm.
Right? When I'm dealing with like owners of companies, I'm also a little more direct, right? Versus, young team members or female team
Yeah.
members. Um, like I'm like, dude, like we asked you to design this last week. We talked about it and then someone's like talking about it. I'm like, we talked about this for 20 minutes last week about designing this, and you just didn't do it. So I just need you to do it. Can you do that for me next week? Right? Like I don't want to have this conversation with a 50-year-old man, right? I'm like, let's go,
Yes.
right?
Yes.
I'd like to
That
work with you on the next project, but if this is what I'm getting, like choose to be write down the to-do list, your own to-do list as a 50-year-old, or like not. Like, come on.
it's funny. I remember when I bought a practice when I was 26, right out of school, right? And I'm 26 holding 50-year-old employees accountable, 50-year-old bankers, vendors. Like it's a weird thing to have to do that, but you have to. I mean, I guess you don't have to. The alternative is getting a result you don't want, an
Yep.
undesired result. So,
Yep.
I mean, choose what you want to do, but
I-
yeah.
i- If they were, what I've noticed is very successful people in life are going to naturally tend to do this unless they're overwhelmed and distracted, right? So just in general, I have to do this for folks who have not been as successful as me in my life. If you're just using like a general rule of thumb,
Hmm.
right? You're like, okay, this person has not been overly successful in their life, which means they probably don't have the habits, right? Or the situation that allowed them to get there,
Yeah,
right?
sure.
Situation like a strong spouse, right? Or something, somebody very supportive or something like that, right? So it's like, okay, if they haven't got me, they probably don't have that same habit. So I got to keep more of an eye on and hold those people accountable, right? Now,
Mhm.
somebody who's like more successful than me, it's more about their attention,
Oh, sure. Yeah,
like
yeah.
priorities, right? Like I know they can kick butt, but are they focused on what we're doing or are they
What
focused
you
on
need to do.
something else? That's what I'm watching out for people who are more successful than me is allocation of time
Yeah,
and attention.
that's well
So,
said. That's well said. I think you articulated that well. Kind of those two buckets. Yep.
yep. Um, okay, what other project pros you got there, Tiger?
Let me see. Oh, so we were talking about this offline a little bit, but potentially a sale is coming up that I have some partners. So we bought a multifamily property like a year ago, and we did a cost seg on it, thinking we're going to hold this property for 5 to 10 years, and now we got an LOI to purchase the property at a good price. It's hard to say no to. And so now I'm looking down the barrel of, well, one, how do I do a 1031 exchange with my partners in this LLC if we don't all want a 1031 together? And I kind of know the answer, but you and I can talk about this for the audience. And then yeah, so I guess that's probably the big one is just how to 1031 out of this and minimize the tax burden that's going to eat into the returns. And then also, I guess the second part is you just did a 1031. So maybe you can start by explaining kind of how that went.
So, I'm gonna go like contextual here. Just when people ask us how we built a successful dental practice, you're like, well, it's like 100 things, but it's also the same 100 problems, right? Like when you look at Facebook posts on questions in dentistry, it's pretty much the same 100 questions, right?
Yeah.
Every time. Okay. So wealth building and investing, it's the same 100 questions, right? It's just all of them experience those 100 questions at different times. So this is one of the 100 questions, right? Um, how do you take wealth from one property into the next, right, in real estate and minimize the taxation? Okay. When you have not run a cost segregation analysis or the segregation analysis is over 5 years old, your depreciation recapture tax, okay, which is typically 25% of the difference between your sales price and your basis. The basis is like what you haven't depreciated, is depreciation recapture tax. You cannot get rid of that tax. Okay. There is no way to get rid of that tax that I am aware of. Okay. If you experience that tax, the only way is to avoid it through a 1031 exchange. Okay. Capital gain tax is you can get rid of it through 1031, but you can also use other means to get rid of it. So 1031, capital gain tax is not a big of a bugger on real estate. It's the depreciation recapture tax. Okay. So, depreciation recapture tax. If the only way to not pay that tax is to do a 1031, then it's like, how do I plan for this? Okay. You made good money on your project. I made good money on my project, right? And realistically, I cash out refied on mine. Okay. Took out on this one about About 135% about what I put in, right? So if I put in $1 million, I got back 1.3 on my refi, and then about the same amount I was going to get on the sale. Let's say if I put in $1 million, about another 1.3. Okay. The problem was because we did this, totally depreciated the heck out of this thing to minimize taxes. Between my capital gain, state taxes, right? We have state taxes when we sell real estate. It's not huge, but it adds up. Fees, broker fees. I was probably looking at 60% of that extra $1 million I was going to get, um, or 1.3 million in this example. 60% of that was going to go to all that. And if 60% goes to taxes and broker fees, like, should I even sell it? Right? And the
Mhm.
answer is probably no, right? That's a huge hit, right? To just take 600, I think in this case, for me personally, it was actually 600K that I was just going to give away, right? And I'm like,
Yep.
I'm not super into giving away 600K. That's a huge, if you calculate like your return on that money in year one, like you're not going to give away, you'd rather keep your 60% your return in year one, right?
Yeah,
So
no
like,
kidding.
it's like I have to 1031 this, right? In my brain, right? To continue to snowball those funds. So I tried to strategize for a while, and I do this. I think on something, I talk to people, right? But at the end of the day, if I don't come up with a superior strategy, I just go for it, right? And so on this one, I just said, you know what? I haven't thought of the best strategy. Like I'm just going to go for it. Okay. Here is what I learned based off of this is not my first time doing a 1031, but this is what I learned from going for it this time. And I will reflect on this deeper and more in the future because I just got this done on Monday, but this is what I've learned. The ideal situation is actually to identify the property you're going to replace, your replacement property, the property that you're going to buy with this 1031 first,
Yes.
and
Hmm.
put it under contract, under a long-term contract.
Yep.
Okay? Because being under a 1031, you only have 45 days to identify, some options to put your money into, and that can be very stressful.
For
Mine
sure.
happened to not on purpose, it's just how things worked out, is mine ended up closing right before the holidays. So I spent a little time thinking of this, but I want to spend some time with the family, right? And I wanted to plan my goals for 26, get real clear on my whole 60 pages of goals and all that, my epic year process. So I literally just had 3 weeks to knock this out, right? And so that was a lot. I worked every weekend the last 3 weeks trying to figure this out. Okay. And because you have to like do different layers, you have to try stuff that you're thinking, reflect on it, and get smarter, and then narrow down what you really want, right? What do you really want and what fits that? Okay. So, what I learned from that, number one key point, lock up what you want ahead of time before you do your thing. Because if I hire Marcus and Millichap or Northmark, one of these guys that specializes in selling, this was a retail, specializes in selling retail to 1031 buyers out of California, right? They know what prices are typically going to sell. And so you're not guaranteed to get it done quickly, but you pretty much have a good idea. And so if you put the other thing under contract for some time, you add some options to it, like that's what I would do, right? Like
Yep.
60-day due
Yep.
diligence period, maybe 90.
Give yourself a
Um,
runway. Give yourself a
Give
nice
yourself a
long
runway,
runway.
plenty of
Yep.
runway so you're not stressed, right? I'm going to sell this other building in 6 months. I need at least 6 months. Maybe I put down 10K in earnest money, something small that I don't mind letting go of if I needed to, right? Or after the 90 days, and then a couple $5,000 extensions, right? And then there's other ways to buy this second property that I want anyways, right? It doesn't have to be my 1031. So even if my 1031 didn't work out or something, and maybe I could buy it anyways, okay? But number one, you lock up this other property. Number two, when you're identifying, you need to get super clear on what you want. Okay. Traditionally in 1031s, most people buy like a coupon clipper, right? A coupon clipper is a building that has a tenant with a long lease, right? It's not a great price, but it's just like reliable,
Yep.
good building,
Safe,
solid cash
stable.
flow,
Yep.
stable, right? Most of these people, they're 60, 70 with these 1031s, and so they just want 50. They just want reliable income. They're focused on their quality of life, their grandkids. They're not focused on building their
Maximizing.
wealth,
Yeah,
right?
they're not maximizing returns. Yeah.
Nope. For me, my calling is development. I love creating community impact, building something awesome, right? My philosophy is build cool shit and have fun, right? So
Yep.
at the end of the day, even though I looked at some of these coupon clippers, at the end of the day, I really wanted to develop something, and I really want high returns because I am in the building wealth phase. So for me to develop something, it has to be hands-on, and the closer it is to me, the more likely it's going to be hands-on, right?
Sure.
So
Yep.
I probably talked to 15 different folks on this, right? Some of our dental buddies who were awesome, brought me some pretty strong deals nationally, but they were maybe they had higher, one of them had a pretty high return, and then a broker brought me another one that had a higher return, maybe like a 9 cap, 10 cap. So they're good deals, right? But I'm not really addressing my calling, right? It's just like a savings account if I do that, right? So you really need to identify what do you really want first. And so I had some backups that I was working on that I was like, these are pretty good if my other stuff doesn't work out. But I just put it out there locally. I went to all the folks I know and I say, hey, I got $1 million and 2.4 million in debt. And I'd love to do a development project, something that somebody already has going, right?
Hmm.
And once I got really clear about that, like what I really wanted, I had about 6 development projects locally come to me.
Wow.
Okay, so that step two, identify what you really want, right? And I guess that would be step one if you're putting something under contract. Get really clear with yourself what your ideal is, right? Not you're
Yes.
trying to cover your butt. You can have that option too, but like, what do you really want? Okay.
Yep.
So what you really want, then lock that up first before you sell your other thing. Okay.
Yep.
Now, optionality. When you identify a 1031, there are 3 different rules you can utilize for the identification. Okay. You can identify 3 properties. The second one I'm going to talk about is you can do 200% of the value of your deal. Okay.
Hmm.
At 3.4 million, it was hard to find $3.4 million development deals. Okay. That's a big piece of land and a lot of debt to
Yeah.
just be paying on, right?
Yep.
So the math, it took me a while to figure this was not intuitive for me. I'm not going to say, oh, I'm so smart, I just figured this out. It took me a while. Well, the math is if you identify 3 projects, okay, because it's just, I couldn't find 3 big enough ones. I could identify 3 projects that were about half of my money each, okay, which is 500,000 in equity and about
500
1.2
million in
million in debt.
equity. Yeah,
Yeah,
500 to
1.2
a
in debt.
million. Yep, I got
Yep.
you.
Yep. 500,000 in equity, 1.2 million in debt. I could find more of those. So what I did was I said, okay, if I identify 3 properties that are like that, that's one option. But if I use the 200% rule, half plus half plus half plus half equals 200%. So I can actually identify 4 properties
Hmm.
if I use the 200% rule. So this is what took me like 3 weeks from 2 weeks before my brain finally stumbled upon this basic math. I was like, oh, this is genius. So I
So
actually, yeah,
can you stop real quick? So
yeah,
on the 200% rule, you need to identify uh an aggregate of properties or an aggregate of separate properties to equal that 200%. It can be one property, but it can also be three, it can be four, it can be five. You can
but if you
okay.
do one, you think about the math there. y- Um, if you do like 3/4 and 25% for like, so my total was 3.4 million,
Yes.
okay, of debt and equity, okay?
Yes.
If I find a place that's like 75% of my debt and equity, and then another one that's 25%, okay, of my debt and equity. That creates a whole 1031, right?
Okay.
Then I only
Yep.
have one backup for my 75%. I only have one backup for my 25%.
Okay.
You're limiting your flexibility,
Yep.
okay? But if you do 50%, so like in your case, take your debt plus your equity, okay? If you decide that you're going to identify 4 properties that all are about worth 50% of that total debt plus equity, 2 of those 4 have to work out.
Mm.
That
Okay.
is the best odds.
Yep. Sure.
Okay. That gives you the most flexibility, the most, And this wasn't intuitive. I mean, this took me a couple weeks to flush out. This was the best solution I found. So my recommendation for you is to start with that. Start with, I'm getting X total in debt and equity. I'm going to, depending on the size of it, right? If it's around 3.4 million, it just depends on the pools you want to play in. But the pools I want to play in, like the land is, typically a certain size. And I don't really want more than 1.7 million worth of land, or a deep value add. I don't want more than 1.7 million worth of a deep value add. So, yep. So I identified four properties. Okay. These were all with developers that I admire. Okay.
Mhm.
One, two of them are another developer that's been developing the last 4 years in my area. They've been doing like really nice buildings in really nice areas, like a really nice teed up project, right? They're very detail oriented, like you, right? And I'm like, I like these guys, right? And so I identified two of their projects, okay, that are in the development phase. And they will allow me to bring my equity and bring the debt to maybe own the land, right? With a management contract. They're the manager still, right? I'm not stepping on their toes, but I like own the land, right? That's
Mhm.
a way to be part of the development, be on the development team, but also satisfy my 1031.
Hmm.
Okay.
Yeah, so where were they roughly in the process? So they were working through entitlements? Were they already plans and permits? Where are they at?
Yeah, let me give you a few different examples. So these guys on one project, they had literally just acquired half the land and they have a contract to acquire the other half of the land in March. And in a
Okay.
1031, you have 45 days to identify, but 180 days total to close. So I have June 10th, right? So I know they're going to have two pieces of land that will satisfy on this first project. The two pieces of land, let's say, are worth like 2.2 million. So I know they can sell me a share through a tick of 1.7 of that 2.2. Okay.
Okay.
It's a win for them because they get some equity. It's a win for them because I'm a developer. I can add value, help them. I don't
Mhm.
try to say, hey, what about like being compensated, right? I say, hey, if you just invite me to the meetings, and if I'm not being compensated, then if I'm busy, I don't feel bad about it, right?
Yep.
And if I show up and I start adding value and you're like, Josh, we'd love to have you do this piece, and then you can figure out something. Let it naturally
Renegotiate.
evolve, right?
Yep.
Nobody's stepping on toes.
Yep.
So that was one developer. A second developer, he does a lot of the downtown stuff and like redevelopment of big downtown buildings. He's been doing that for about 20 years. Very sharp. I can learn a lot from him on like historic tax credits, both local and federal. I mean, he was telling me something about like what was he doing? He was depreciating like the facade of the building because you're basically like donating it to the town by keeping the facade. It's like new stuff, like blowing my mind, right? There's not a lot of stuff, but you want to keep learning these
Every
tax hacks, right?
every now and then you pick up another tip.
You
Yep.
picked up another one. A couple years ago it
Yep.
was the OZ. I'm like, this is gold. A couple years ago it was the equipment. I'm like, this is gold, right?
Yep.
So I'm learning these ticks because the federal tax incentive, if you can get it done, is a huge one. It's 20% tax credits on everything you put in. So if you
Mhm.
put in 10 million, you get 2 million of tax credits, right? Talk about adding to your profitability. Um, so his one though, he's working on the closing on this big, well-known building downtown, right? His two other partners that are like kind of repeat partners are very wealthy local guys, right? One of them's like self-funding this huge like 8 floor retail condo building overlooking the river, right? He's just doing it in cash, right? These types of guys, right? Like, so he's like, Josh, like, I got some big hitters in here. I can't really tell you where we're at. We haven't closed on this thing yet. I was like, look, I've got four options. I'm just going to put you down as one of them. We'll keep having conversations. If it works out, great. If not, that's great too. Okay. Last one is a ski resort. So one of my key project pearls this week on three different projects was work with cool people, give them a short pitch on where you can add value, right? And then ask folks what they need and help them, right? That that's just always my strategy, right? And then I always ask folks what they need and want to help them first, right? Actually, so find cool people, ask them what they need, help them, and give them a short pitch on where I can help, right? And so with these ski resort people, like I met them last year. a friend of a friend connected us. We started chatting. I was just kind of helping them, and then it ended up they closed at the end of the year on these 90 acres on the ski resort where I grew up, right? We're not closing on the ski resort itself. There isn't a ski resort. It's just like the ski lodge and the ski chairs, right? The ski mountain, right? That's separate. There is no like services up there. There's like five houses. It's been completely underdeveloped because this land's been under kind of got stuck for 20 years. So they took it down. And so these guys, I got to know them last year a little, got to know them again. They're super smart. Okay. They're big players. There's a ton of different lots on this 90 acres, right?
Mhm.
And they're smart enough that like they have a CFO. They're smart enough that like if I needed to put my 1030, they don't need me, right? They have plenty of funds on this. But like if I'm like, hey guys, I don't have any other options. Can we find a way to put my 1031 money in there? They're smart enough to figure it out. Right. We
Yep.
talked a little bit with the CFO and stuff. So that's kind of like my parachute, right? Super savvy guys who don't need my money, but I'm already working with them on the ski resort thing. And so if I needed to take half or all of it, I could just throw it in one of these projects. We'd figure it out. Friendly terms. It's a friendly, intelligent party with lots of,
Yes.
right? When you have
Yeah.
that, it's a great parachute.
Yeah. So if you go back to like, so you always have limited resources for unlimited opportunities. So like deciding where you're going to put your 1031 exchange money is like so valuable because one, right, you could just plug it into one of these coupon clippings, national credit tenant that, you just get a little cash flow every month and fine, done, easy. But like you don't get those ancillary benefits of like partnering with another developer, maybe learning something, maybe growing that relationship to be bigger than what you were planning to do anyway, right? And so you get to basically use that 1031 as an opportunity to go deeper with some of these other cool players and learn what they're doing. So the value is
100%.
is way beyond what the 1031 actually is.
Yeah, so learning impact, community impact. I'd love
Yep.
to do a series, or I'd love to redo one of our old downtown buildings into something functional today, right? That it's mostly empty. I would love to do one of these ground up developments that these guys are doing that are very cool, right? So impact. And then the third is returns, right? We talk about this. Like my average annual return on projects like this is like 49%. My average IRR is like 37%, right? So what does that tell me? That tells me if you create real value, you take something and you turn it into something that's better, right? It's like you've seen the like Facebook post where it's like you take iron ore, it's worth this much, and you take iron ore and you do this to it, it's worth this much. You take iron ore and you
Yep.
make it into a little whatever needle or something, it's worth this much, right? It's the same iron
Yep.
ore, it's the same thing with real estate. And so when I look at this too, I'm like, if we're adding real value, creating something that wasn't there before, long terms, not only you impact, not only you learning, but your returns are going to be higher too.
Sure. Yep.
I love
Can
it.
just a tactical question. So each of these, your plan would be going with a tick structure, so that again, if you need to in the future, you can 1031.
I have to do with the tick structure because that's how we exit, right? So
Yes.
let's talk about the ways to get out of, let's do this for the listeners. So,
Yes.
um,
So
yeah,
setting the table basically is this is a common thing that happens. You
yeah,
you establish you want to buy a property with a couple partners, right? And so you establish the most simple, I should say simple, but relatively simple way to do it is you establish an LLC with an operating agreement. You all have your whatever your partnership stake is within that LLC that then holds that property, right? And now you decide to sell the property. And what do you do if your partners don't want 1031 exchange to the next one with you?
yeah. So the rule is if you are in an LLC together and you want a 1031, you all have to 1031 out into the next property together too.
Yes.
So the best strategy is on the front end, each of you bring an LLC, your own LLC, your own investments LLC, and then your operating agreement is actually just a tick, which is just an agreement that isn't around an LLC. It's just an agreement between your LLCs. Then you can all 1031 out together.
Yep.
So that would be the recommendation. Okay,
Up
look into
front.
ticks up
Yep.
front. And ticks are older than LLCs. People are like, I've never done a tick. Well, they're older than LLCs, so it's not like they're not around. The data's out there. Okay, so
Yes.
so do that. Now, let's say it's later on, let's say midway, you guys aren't selling right away. You can change to a tick. Usually you want to do it if you learn about this.
Hey Josh, you're cutting out a little bit.
Oh, we're going to sell that in a year or two. Am I better?
I don't know if you've caught up
Am I
yet.
better?
Not yet. I can't see you moving.
Okay.
Oh, there you go. Maybe it's working now.
Okay. Let me know. What about
So
good?
so you
Okay.
you fell
This
off.
is the nature of being at the ski condo.
Yep. So you fell off. You were saying, okay. So say you don't do the upfront tick structure. The next option you said is you can convert to a tick structure later. I think that's where you fell off.
Yeah. Typically
Right.
non-taxable because it's still your equity, right? You're just moving it into an LLC. You just have to submit something to the county, sign some forms. Okay. So, an IRS wise, typically you want to do that like a year before. Okay.
Okay.
Option three, you have done neither. You have not started with a tick, you've not converted to a tick. There are two common structures, one called a drop and swap and one called a swap and drop. Okay. A drop and swap means the partners that don't want to 1031 along with everybody else, you drop them from the partnership. Okay, selling shares, etc. You can look it up. Okay, but
Yep.
keep it simple.
Yep.
Um, the swap and drop, the swap piece means moving the money to the next property. So the first one, drop and swap, you drop partners who don't want to 1031 to the next property, and then you swap to the next property. Okay. The swap and
Yep.
drop is you actually 31 into the next property, and then the guys that don't want to be in anymore, you get rid of them at that point. You sell those shares at that point. Okay.
Mm.
There is IRS
Yep.
guidance
Makes
around
sense.
this. There are like things like, oh, you shouldn't do it. You know, there's no hard and fast rules, right? It's like there's rules of thumbs, there's guidance released, and you just got to kind of follow those rules on timing, okay, and structure. Talk to your accountant, look up on ChatGPT first. I mean, I usually
Oh,
always look up on AI first before I talk to
yeah.
my accountant or attorney, or so to save a bunch of time. But yeah, start there. Good.
Yes. Yep. Good.
And and the value piece here, like we said, getting back to like why we're even doing this, if I'm getting $1 million at a sale, and if I've done a cost seg in the last 5 years, I'm probably between tax and everything giving 600 grand of that million to the government and to vendors, right? I mean, I still got to give some to vendors and stuff, but now basically, actually, yeah, it is the 600 grand was my situation. So now I'm taking that 600
Or-
grand and I get to invest it. So if you think about your year one return, right? You're just running your performa. In year one, would you like to invest 400,000 or in year one, would you like to invest 1 million and get those returns, right? And,
Yep.
and the answer is always going to be 1 million. So yeah, some people are like, don't 1031, just pay the tax. I get it if you only have capital gain tax and it's 20%, right?
Yeah.
I get it. But when it's 60%, when you have depreciation recapture and capital gain tax, it just doesn't make sense to not 1031.
No. No, and that's what I'm looking at too, is not quite those numbers, but close. When I look at, I mean, I took $600,000 in depreciation from this property last year,
Yeah.
so yeah,
Yeah.
so it's gonna hurt to have to pay that back. And then on top of that, I think, the contract, if we move forward at 8.2 million, we bought the property for 6.3 million
Yep.
a year
Yep.
ago, so almost 2 million in gain
Awesome.
there. So that's great. I
Awesome.
mean, it's just I got to make sure that I solve this problem correctly.
What percent are you in the deal? Ballpark.
About a third.
Yeah. So your taxes on depreciation, I mean, on capital gain are probably like two times 20, 25, right? So you're talking like five. Yeah, I mean that's
Yeah.
quite expensive, right?
Yeah.
Plus the depreciation recapture tax. That's
That's
a
the one.
dinger. Yeah, you're probably at
That's
least 500K in taxes
yeah.
that you don't want to
So
pay.
yes.
So what's
So
easier than earning an extra 500,000 is keeping an extra 500,000, right? You could work as a dentist grinding away in the chair for your W-2 income for 500,000 all year, right?
But also that's 500,000 after taxes, right? Like
Yeah,
so your net. So if you really need to produce,
800
800,000 or you got a net
in income.
800,000 to get 500 net after taxes.
Yeah, it's the
So
best return on your time. Figure
yeah.
it out.
Yeah, you said, oh, I had to work hard the last 3 weeks solving this problem, but the problem for you is a $600,000 problem. So it's worth to spend 3 weekends, right? Like digging into this to solve the issue.
You're just not very empathetic. That was time away from my family, Reed. No, you're 100% right, right? I would
Yeah.
rather take those 3 weekends and weeks and just get after it than spend, 30, 40 hours away slogging in the dental chair with my back hurting and all the stress and pain that comes with it. 100%.
Yeah.
So,
And I get a benefit from your drudgery there, right? So
yeah, that's what
that's
we're
how
here
it
for. I'll
works.
help each other, yeah, get smarter. So,
You go through the pain and then I get the benefit. So cool.
I'm sure it'll go the other way, on if I ever do a mobile home park or something. I think the rest of my Project Pearls, I mean, I don't feel like I think we really covered 1031, which I think was super tangible and important. I think the rest of this, like Project Pearl stuff, we could cover on like the next episode. So I think
Sure.
this 1031 was super impactful, super tangible, actionable, like everything we really want, right? Not esoteric. It's like this is really happening to us, and this is really what we're doing for solutions. And if you guys have any questions, reach out on your 1031s. Again, we talk about opportunity zone a lot, which solves capital gain on the front end, but it does
Mhm.
not solve depreciation recapture on the front end, right? So if I'm selling a business, I do OZ. If I'm selling stock, I do OZ. If I'm selling crypto, I do OZ. But if I've bought a real estate property and I've done a cost segregation analysis on it in the last 5 years, OZ is not typically the right fit. The 1031 is typically the right solution.
Yep.
Wanted that to be clear for folks. So good.
Yep. That was good.
Okay. Appreciate everybody tuning in. I hope you've learned a lot. I always learn a lot. I love doing this with Reed. He's just very sharp, very grounded, and it just helps me make me better, right? Iron sharpens iron. And thanks all for tuning in. Take care.